Hello friends and welcome to StoryNest. Today we bring you How to Invest Like a Champion with Mark Minervini's Screening Strategy. I'm Yola, your storyteller, motivational voice, and consultant with a passion for sharing insights that inspire growth, trust, and transformation. Over the years, I've uncovered strategies and stories that empower individuals to change their mindset and achieve real success. So, let's dive into today's powerful lesson, discovering how Mark Minervini's proven approach can help you invest like a true champion. What if you could copy the exact method a US investing champion uses to pinpoint monster growth stocks right before they explode? Mark Minervini didn't just win the championship once, he did it using a specific, repeatable system. So in this video, I'm pulling back the curtain to show you, step by step, how to build his powerhouse stock screen from scratch. It's time to stop guessing and start finding the absolute best stocks the market has to offer. Section 1. The Problem and the Promise. We've all been there, right? You're an investor, staring at a screen with thousands of stocks, and you feel completely paralyzed. Every headline is screaming about the next big thing, and every analyst has a different opinion. Trying to find a true market leader, a stock that can deliver what Minervini calls super performance, feels like searching for a needle in a haystack. So you end up chasing tips, guessing, or worse, buying stocks that are already way past their prime. That's the exact problem Mark Minervini, one of America's most legendary stock traders, wanted to solve. His goal wasn't just to find good companies, it was to find the absolute best companies at the precise moment they were ready to launch. So he developed a system called SEPA, or Specific Entry Point Analysis. This isn't about luck, and it's definitely not about gut feelings. It's a disciplined, step-by-step process designed to filter out all the noise and zero in on stocks with explosive potential. The whole philosophy is built on one simple, powerful idea. The biggest winning stocks in history all share a few key traits before they go on those life-changing runs. By creating a super strict screening process to find these characteristics, you can seriously stack the odds in your favor. You stop being a passive bystander and become a methodical hunter of elite stocks. So, where does the hunt begin? It all starts with a set of non-negotiable rules Minervini calls his trend template. Section 2. The core of the strategy. The trend template. Think of the trend template as the bouncer at an exclusive club. It's the first, most important filter in Minervini's entire process. If a stock doesn't pass every single one of these criteria, it's out. No exceptions, no second chances. The goal is simple: to make sure we are only fishing in the right pond, the one full of stocks in powerful, confirmed uptrends. Trading with the trend is everything. You want the wind at your back, not blowing in your face. Minervini's research showed that nearly all of the market's biggest winners were already in a solid uptrend before they took off. He's not trying to be a hero by catching a falling knife or timing the absolute bottom. He wants to join a party that's already in full swing and just starting to get really good. The trend template is basically a checklist of technical vital signs that defines a healthy trending stock. It's a series of rules built around key moving averages and price strength. Let's break down exactly what they are. Section 3. Building the screen. The technical rules. All right, imagine you have a stock screener open right now. These are the exact filters you're going to plug in. First, the stock's price has to be above its key long-term moving averages. Specifically, the price needs to be trading above both its 150-day and its 200-day moving average. The 200-day moving average is like the long-term line in the sand between a bull and a bear market for a stock. If you're above it, you're generally in good shape. The 150-day confirms that intermediate-term strength. Second, the moving averages themselves need to line up correctly. The 150-day moving average must be above the 200-day moving average. This tells you that not only is the price strong now, but the medium-term trend is picking up steam faster than the long-term trend. That's a huge sign of upward momentum. Third, that long-term trend has to be moving up. The 200-day moving average needs to have been climbing for at least 1 month, though 4 to 5 months is even better. A flat or declining 200-day moving average is a major red flag, even if the price is temporarily above it. We want to see proof of sustained institutional buying. Fourth, we bring in a short-term indicator. The 50-day moving average has to be sitting above both the 150-day and 200-day moving averages. This is our turbocharger. It signals the stock is really accelerating into its uptrend. Fifth, where is the price right now? It needs to be at least 30% above its 52-week low. We are not looking for beaten-down bargain bin stocks. We want stocks that have already proven their strength. And on the flip side, the current price has to be within 25% of its 52-week high, and the closer, the better. This probably feels backward to the old buy low, sell high mantra, but champions buy high and sell higher. A stock hitting new highs is screaming leadership because there's no overhead supply from old sellers. Finally, and this one is a deal breaker, the stock has to show high relative strength, or RS. An RS rating, which you can find on platforms like Investors Business Daily, compares a stock's performance to the entire market. Minervini requires an RS rating of at least 70, but he really wants to see it above 80. This means the stock is outperforming 70 to 80% of all other companies. We only want leaders, period. If a stock checks every single one of these boxes, it passes the first test. It's officially in what's known as a Stage 2 uptrend and is ready for the next round of analysis. Section 4. Layering on the fundamentals. A beautiful technical chart is useless without the fuel to make it go. For Minervini, that fuel is fundamentals, specifically earnings and sales growth. Once a stock passes the trend template, we pop the hood and inspect the engine of the business itself. The first fundamental filter is earnings growth. Minervini is hunting for companies with at least 20 to 50% growth in annual earnings per share, EPS. But even more important is acceleration. He wants to see the most recent quarterly EPS growth pop by 25% or more. This proves the company isn't just growing, it's speeding up. Next, that growth needs to show up on the top line, sales. He screens for companies with sales growth of at least 20%. Strong sales prove the earnings aren't just a fluke from one-time cost-cutting. They're being driven by real growing demand. Another huge clue is earnings surprises. When a company blows past Wall Street's earnings estimates, it forces the big institutional players to sit up, take notice, and reevaluate the stock. These positive surprises can be a massive catalyst. Upward analyst revisions of 5% or more are also a really bullish sign. Finally, Minervini looks at profit margins. He wants to see improving margins, which shows the company is getting more efficient and profitable as it expands. He also looks at the industry itself. A great stock in a hot industry has a much better shot than a great stock in a forgotten one. CTA, now, building a screen with all these rules does require a decent tool. Many traders use platforms like MarketSmith, TradingView, or ChartMill to apply these exact filters. I've dropped a few links in the description below if you want to check out the tools that make this all possible. Section 5. The final piece. The Volatility Contraction Pattern, VCP. So, we've built our screen. We've filtered thousands of stocks down to a small, manageable list of super strong companies in confirmed uptrends. Now for the million-dollar question. When exactly do you buy? This is where Minervini's signature move comes in. The Volatility Contraction Pattern, or VCP. The VCP is a beautiful visual picture of supply and demand at work. After a stock has made a nice run-up, it's going to consolidate as some people take profits. A VCP is a very specific type of consolidation, where the price swings get tighter and tighter from left to right. Here's what it looks like. A stock might pull back, say, 20%. It then rallies back toward its high before pulling back again, but this time maybe only 10%. It might do this a few more times, with each little pullback getting smaller. Maybe the last one is only 5%. This tightening action is the key. It's a sign that the supply of stock for sale is drying up. The sellers are getting tired. At the same time, you should see volume dry up along with the price. On those little pullbacks, trading volume should be super light, confirming that there's no real selling pressure. This whole process is like coiling a spring. As the price range gets tighter and tighter, energy is being stored up for the next big move. The buy point, or what Minervini calls the pivot, is the moment the stock breaks out from that tight area on a huge surge in volume. That's the signal that demand has finally crushed the last bit of supply and the stock is ready to launch. This combo, a stock passing the trend template, having monster fundamentals, and then forming a clean VCP, is the A+ setup Minervini has used to generate his championship returns. Conclusion: your system for success. So, let's recap the game plan. First, we use the trend template to make sure we're only playing with the strongest stocks in uptrends. Second, we layer on strict fundamental criteria, demanding powerful, accelerating growth in sales and earnings. Third, we patiently wait for that stock to form a clean consolidation pattern, the VCP, which tells us a low-risk entry point is right around the corner. And finally, we only pull the trigger when the overall stock market is also healthy and in an uptrend. This isn't a get-rich-quick scheme. It's a disciplined, repeatable process that puts the odds of success firmly on your side. It takes a little work to build the screen and a lot of patience to wait for the perfect setup. But by following this champion's blueprint, you can stop gambling and start operating like a pro. You learn to focus only on the best of the best and to strike with precision. Thank you for joining me on this journey. I'm Yola, and it's been an absolute joy to bring these words to life for you. May the lessons and stories shared here continue to spark new ideas, guide your path, and inspire your growth. If you found value in this, please like, share, and subscribe to StoryNest, your home for wisdom, inspiration, and powerful stories. Until we meet again, stay curious, stay inspired, and never stop learning.